Yes, alright, we are live from this point of time, and in this particular presentation, we are going to focusing on how we need to take a stand over there if you are investing into the index fund, and why you need to take a stand where you can invest your all the fund into the index fund and then stop worry about the why the market is failing and going on a bull run. So this is the simplest way which I have discovered over the last few years, and from the basic to the till the expert level, you might have just entered first into the index fund, which is started by the Nifty 50 and which is follow completely Nifty 50 as per their weightage. And if you following the Nifty 50 index, that means you are going to take a good returns from that. This is a possible return you can generate annually from the index fund without any effort. It may be little bit about effort for yourself which you need to be give in order to generate this kind of results. Now have a look at this channel. You might be seeing this type of company. These are the company as MNC which is just operate on a global level. You might be seeing this is a JP Morgan investment firm, and there are so many including in Apple, Amazon, maybe where is Amazon? There are so many companies, Microsoft, and all the company which is at the top valuations in the world. They are trading at this Dow Jones, and you can buy full of them just because of you have invested your 30 company at a time. Then you will get on an average between a marginal return which is almost good if you are generated if you are able to generate 10 to 20 CAGR over the last 10 years, then you will make end up good returns as compared to FDs and another things. Now this is a chart which is performed by the US stock market, and when it is started from here to there, this generated almost 7% CAGR because of at this time this is a flat performance because there is no industry revolutions is happen right now just because of there is no company such company which is started to become a big multi-bagger from here to there. There is nothing happen with that, but over time when the market is rise up and just keep innovating the new solutions for the people, then market is size it started to rise up very fast. It has happened right now just because of they know this is the right time to invest into the stock market. And when you understand the rise of every market, it's required their own patience. And from here to there, you might be seeing there is no result. But if you see the CAGR from here to there, this is a much higher as compared to there. So now this is the population growth which is changing keep in future, and this has happened with total return you will generate over the last 60 years, which is almost 5,900%, which is great. And when you look at this is the .com value, and it is comes the all the prices and the all stock market, it will corrected almost 50%. And if you are knowing that this is a market and this market is corrected quite a lot, that means you are not having a right course of actions. If you are able to take your more and more position over there, that means you are gonna be make more return as compared to another people. So this has happened in the last 30 years in the stock market of US. And when look at this S&P 500 returns, which is quite amazing. As I earlier said that when the stock performance is going down and continuously an uptrend is coming behind. In 1942, the rise of the stock market it has started to begin. At this time, the innovations and many of things are come together and they meet each other and they created a new project, a new product for the peoples and the people needs, and that's happened at the time. Now have a look at this data about that Nifty 50, and if you look at this data, then you might be seeing that Nifty 50 has been starting early in 1999. Okay, from here to there, this is almost generated at 2100 over the last 23 years, which is decent for the people who don't know about that. What is the real returns I can get from the stock market? So this is the basic thing which you need to know about, and if you know very deeply, then you might be considered to go anywhere else. So just do that. This is another chart of price predictions index from the Jakarta, and if you look at the 18 years of performance from this chart to here, this is give almost 14% CAGR. That's good, and plus dividend, which is almost 2%. That's also impressive for the people who really looking for the thing that can be generated or more and more money from the stocks. That's great. You can get more and more dividend from here, and also you can grow your money 14 plus CAG. Oh, that's impressive. Now have a look at this trade data, and this is about the 28 years of performance in Singapore market and how it is happened. Let's have a look. This is the 4.5 CAGR returns over the last 28 years plus the dividend side. It is almost 3% dividend you can get over there in 2018. Just because of you have invested your money into the market of Singapore, that means you are generating your all CAGR return, which is almost 5%. And from here, you will have to work for until you die. And because in 18 years in Hong Kong stock market, the CAGR is almost 8.5%, and the dividend yield is much higher as compared to Singapore and other countries. So you just need to know about the what's going on and how you should take a more returns from the market, which is quite impressive for you if you are applying this thing very aggressively. So this is the Malaysian market, which is tell us about the 6% CAGR over the last 18 years and plus 3% dividend yield they will get over the last 18 years. From here, if you learn the lessons of 10% CAGR as an annually while putting your little effort every month, every years, then you are able to generate a good returns. Let's say in S&P 500 index fund, which is this is supported by the ETF, which is the S&P 500 ETF. You can see this. There are so many indexes, and they also created their all ETFs where you can invest without any tension of brokerage fees and without any just demat account. Now have a look at this data. This data tells us about the why you need to invest your money into the stock market. Let's assuming that you have annual income which is almost $60,000 per year. In 30 years, you would make a 30 times of that annual income. That's amazing. You have get this. You have get every year at the only 10% in invest, and you just keep growing at a 12% rate over the last 30 years. Over the future 30 years, that means you are going to end up this amount of money by investing only 10% rupees and investing all money into the stock market. You will end up the same money as you are getting from here, because of if you are getting here the amount of money which is almost the same money as you are getting if you are investing your all money in a SIP terms for 30 years at the rate of 12% CAGR. That's impressive. So this is my side to